Hey everybody, DayTraderRockStar here. In this video, I'm actually going to be going over showing you how to make consistent money in the markets based off of one technique. And the key word there, consistent, comes with a little disclaimer. We're not talking about trading every single day in the market. All right, and I was just doing a members video, and I wanted to do an extra video today because I was going through a lot of the setups going into next week. And, realizing there's great setups out there, but they come about every so often. You know when you have a good setup. I'm going to explain how I find the great setups that we trade at Day Trading Radio. But every day the market is open, and it's like an open casino. So you could go in there, decide to sit down and play a game and play your cards and gamble. But truly, just like anything else, and I always use analogies for this, you have to wait for your pitch. You have to wait for the hand that's being dealt that you could bet on. It's the same thing with everything. Everything that you want to be good at, there's a direct line that's proven to work out better than any other path. And it could be anything you're doing, but there's always a better way of doing it. So for trading, basically, if you have established a technique that works really great, but it doesn't show up every day, and you're forced to go to the market every day and trade and try to make something happen, eventually, those losses are going to catch up to you because it's a random thing. Lots of times you're in the markets, you're dealing with up stocks, down stocks, news, and everything. But the divergence setup that I'm going to show you today, that is so reliable, so good that you have to really force yourself to take that setup. And the more you just focus on that setup and not worry about the other subs, the more you're going to keep that profit much higher. You're not going to give anything back on trying to wait for something to happen and trade other techniques. I could guarantee you, I guarantee it, I've been trading since 1990s, that this technique is the best technique for swing traders. You don't even have to be in the market full time for this. To get an explosive move, 5 to 7 days, we could predict it. We could see the movement. We could, we could profit from it very easily. It also has there's a great technique to place a stop. So it's a very, protected trade, and it has a very high, the highest probability chance of success, and a good profit to come along with it. And then when you have that, and I can't stress it enough, when you have that, you tend to wait for it. You want to wait for it. As your experience grows in trading, you're going to realize you're going to discard the things that don't work constantly, and you're going to wait for the things that work, and that's when a great trader emerges. All right. So let's talk about the technique. I teach this technique every day live on the show, DayTradingRadio.com. We have a big community of traders there, so feel free to come by there if you want to learn more about the divergence trade. You want to get these alerts. What I also do for members is I do my own research. I'm my own trader, and I trade these. So I have a site called High Probability Setups, which I define all these setups. I define them, I teach them, and then if you're a member, you get the alerts of when these things go. And I'm going to show you that in a second. But let's first talk about the divergence setup. All right, let's start off here. The stochastic indicator, which the divergence is based off of, it was developed in the 1950s by George Lane. Now, you could do some research on the internet. I recommend everyone to look into it. Look at his past, history of a trader. It's an amazing history that this guy has back in the 1950s. One of the beginner traders, technical analysis, where he developed his own oscillator and basically called the stochastics. And you're probably familiar with it. And if you're not, you got to become familiar with it. It's a momentum indicator, and it kind of measures the price over a series of, a time frame. So when we talk about, not getting into detail on the stochastics too much, but basically it's comparing each candle to the previous candles and looking back a certain amount of time. So when you see the parameters on stochastics, and again, I teach this also. If you go to School of Stock, theschoolofstock.com, I have a divergence course which breaks all this down for you. And it teaches you everything about divergence trading, and basically, it's the best course out there for that. So check that out. But basically, we're looking at the closing price of a candle compared to each previous candle. And the stochastics have a range from 0 to 100. And if we look at the 80 and 20 line, lots of people will look at the 80 and 20 like a general overbought and oversold level. But what we're doing is comparing price and the indicator. And what that does, and it's a great example, and for those out there who listen to me talk about this, George Lane gave a great example of this. And he goes, picture a stock being a rocket, and the momentum is the engine. And the momentum is pushing that stock up. It's pushing it up. There's buyers in it, it's buyers in it, it's buyers in it. And the momentum is being measured. You could always measure the momentum. You can measure the altitude of the rocket. These two things are being measured. One with the price of the price of the stock is the altitude, and the momentum is measured by the stochastics. And what we see is the divergence we're looking for is the big thing is actually to watch that momentum drop off, but the momentum has given the stock or the rocket enough momentum to push higher. So that's what happens if you had a rocket that was shooting up in the sky. The engine would die, but the rocket would continue to move up a little until it started to turn over and come back down. So that's basically what we're measuring we're using the stochastic. We're going to lose that momentum first, and we're going to see that on our oscillator, but the price is going to go a little higher. And those two things cause a divergence. And that's the key. That's really the key. So that's what we look for. And then when I show you the results of that, it's amazing to see the results and the probability of the trade working in your favor, and a big profit comes from it, bigger than the average move that has taken on going up to that divergence. So when you have a divergence, you get a bigger than average move, and you get a move in the direction of the divergence, and that's what you want to wait for. So just like the example of the rocket, picture this being the rocket and this being the momentum. The stochastic oscillators down here, the price making new highs as a rocket here, and you can see the rocket moving up, but all of a sudden the stochastic moved lower here, made a lower high. I want to show you that, but the stock made a higher high, and that's the difference. That's the divergence. These are actually diverging away from each other. On the buy side, or a buy signal would be the opposite. It would actually, the market would be coming down. You make a lower low, but the stochastic would be making a higher low. All right, and that's the divergence to the bull side, and that's a buy side. All right, so again, that's what it looks like. And then I basically have made it easy for members just to kind of break down. This is how you should buy and how you should sell, and some other things that go along. This is just your criteria to take the trade here. So I'll give you that little information there also for that. That's a divergence move. That's a buy side divergence move, and then of course we have our sell side divergence rule 2, and that makes it a little bit easier for you. So now, why am I giving you all this? Well, I'm passionate about trading, and I know trading's hard, and I specialize in identifying these, and we post these to Day Trading Radio's high probability setups. So instead of you doing the work or worried about missing it or something, I do the work and I send it out to members. So you actually get to go to the site. If you go to Day Trading Radio, become a member, you actually have access to the high probability setup site, and that's where I place all the divergences. I want to show you that right now. All right, this is the HPS dashboard, and when you go to the dashboard, you'll see these stocks. You'll see a key on the bottom here. The green means they're actively being they're active stocks in a trade right now. Gold means, or gold to yellow means that it hit its target, profit target. And watching means it hasn't yet hit its trigger yet. Gold again hit its target. Green or no gold, it's an active trade. Red, if there's a red dot, means that it hit its stop price. You also get a stop with that. So just to give you an example, we'll look at an active one right now. You click on that chart will come up for you, and you'll see a couple different things. Our stop will be identified, the buy trigger, and the profit zone. Now this is an interesting one. I went over this on a video also, and in the video that goes along with this high probability setups, you get a video each week similar to what this one is, and we outline all the stocks. and I discuss why it's a setup and where it's going to go. So currently we're actually in this one, and we're just a few pennies away from hitting our target. We're 4 cents away. 4 cents away. Can you believe that? And what would happen is you would get a alert that your buy trigger was hit. So if you wanted to and you were in front of your computer, you would say, hey, high probability setups just sent me an alert. Altria is hitting its buy trigger. I know why. You could take the trade. You could do whatever you want with it, information. And even if you're in the trade, you're not in front of the computer, and you get an alert saying, all right, your profit zone has been hit. You could make a decision here to sell. At least it keeps you up to date. And the same thing for the stock. The stop loss, if that's hit, you get an instantaneous email and a text message. So that's instantaneous too. That actually comes within a second of it being hit. So like I said, you don't have to be in front of the computer to trade these setups. The other great thing about high probability setups is that we deal with quality names, real quality names. Every name you'll be usually on the list will be an S&P 500, Dow 30, or NASDAQ 100 stock. A quality name, well-known name, and that's important. Aflac was just recently one of my, just a textbook divergence. And like I said, I always say, right? What I want to do with the high probability setups is identify the divergence, put them on there. You get the setups. You get to decide what you want to do with them. I recommend taking all the divergent setups. Here we had one for this week, or last week, I think it was. And as you can see, I'll have a little note on it. Remember, video goes out with it. We're talking about the low and the lower low and the low and the higher low divergence. The buy trigger, the buy to get into it, the sell trigger. And this one, they explode. They explode. When you have a divergence, they explode. So just imagine not have to worry about anything. And then all of a sudden you get the alert. We have a new HPS setup. You could set up your platform just to take the same trade. You could actually put what we call a bracket order in for a buy trigger or a buy at 42 and change, sell it at whatever you're going to sell it, and put a stop. And you don't even have to worry about it. That's even better. You can automate everything off of the HPS. Tupperware, new Rubbermaid, still not active. LUV. Southwest Airlines. Now this was a different type of setup. This was kind of a little pennant formation. Every so often you'll get a quality name that has another good setup for it, but the majority of the time I want to only have divergences there. You can see that just popped there too. But look at, the important part of this video is to understand that there are some great setups when it comes to a divergence. A divergence added to a trend line or a channel line. Here we have a recognizable channel, a little bearish pennant formation, a drop down. But when you have a divergence, a reversal and a candlestick, very easy to identify. I identify them for you. I send them out. You have your buy trigger there, usually before it gets activated. You're not getting these things after the fact. I'm giving you the setup with a buy trigger, and when that buy trigger gets hit the following week, because this list goes out every Friday. Today's being a Friday. I just sent out this week's watch list. And then the next week we're all prepared to trade it. And again, look, this was just a couple weeks ago. These are the last ones on the HPS watch list. And like I said, when you have a divergence, you have a high probability of a fantastic move from that divergence on every single time. I mean, that's why I am just excited to share this always, to teach it. When you have something so logical and it works so great, you're comfortable teaching it. The only thing I preach to members of Day Trading Radio and to traders in general is that our own faults, our lack of discipline, our lack of patience is what causes us to lose money in the market. I could show you the great setups to get into, but unless you wait for them or have the discipline to take them, because they are great setups and the stops are defined and everything, you have to step up to this. You can't look at something like this and say, all right, I should have got in, and then get in and expect that. You have to get in on every divergence. Divergences are unstoppable. Citigroup, called this whole sector last couple weeks ago. And again, everything has something in common. Divergence setup. Higher, low, lower, lower on the price. Easy stop. Boom. Big move out of the channel. There's a lot of other rules that go along with divergences. But that's what the HPS is there for you. So you don't have to do the research. You get the research sent to you. You get all the alerts sent to you. Everything's automated. And that's it. If you're an active trader, you can tune in to Day Trading Radio, and we trade these. When you get the alert, you can tune in. If you're not an active trader, well, you can just get the alerts and take care of business. When you get home, set up your alerts, set up your trade brackets for the following week, and take it from there. Last thing I'm going to share with you, I'll show you the high probability, actually the school of stock. If you just want to learn about divergence trading, I have a fantastic divergence course here. It's like 20 hours of videos. Also, the high probability methodology course. It's basically the beginner's course in trading, get you really started in trading. But this is my pride and joy, the divergence course. I have a lot of students in that. I update it all the time. These are all the different modules you get. Just give you, but you could go to Day Trading Radio. theschoolofstock.com. Each one of these has, its own video lesson in it. Updates on lane divergences, current lane divergence setups, my favorite divergence trade, mid-level divergence, everything about divergences and how to trade, how to set up your charts for divergence trading, how to spot them on multiple time frames. Everything about it in the foundation, how to read stochastics and stuff. Lots of good information there. Hope you take advantage of all that good information. So that's it. I want to pass on how well that divergence trade is working out. I am off today, but I see that the market is actually at the highs here. And like I said, I just put out the latest HPS watch list for the members. Did an updated video yesterday, and that Altria was our setup for today. And Altria was also divergence. Now, this was a divergence back here for a nice move, but this was a really strong divergence, what we call a mid-pattern divergence, a mid-rotation divergence. And again, not to do a whole new video on mid-pattern divergence. Same technique, but it holds above that 20 line, and it's a super strong setup. So we're looking for Altria to break out here, move above the 200-period moving average. We're in this trade, and it's working out really good. And easy to call that one. I love a mid-pattern divergence. When the divergences are there, we're on top of it. And so many different, like here, big divergence back here. Higher low, lower low on the price. Look at the big move after that. It is so important to get these divergences out there. Hope you enjoyed it. For more information, you can contact me at daytradingradio.com or theschoolofstock.com. Thank you.